Hi, I'm going to talk about buying commodities such as gold and silver and exactly how to do that. We're going to focus on gold, and there's three ways or three primary ways to invest in gold. I'll explain each and the pros and cons for each. First is just going out and buying physical gold. You would go to a shop where you can actually see them selling it and you would purchase it there. How does that work? Well, there's a spot price. That's the first thing to know. And the second is the premium. So the spot price is the current price of gold. Let's just say you look online or in the paper and you see that it's $2,000 an ounce. They usually quote it per ounce. That's the price at which it sits between buyers and sellers. When you go buy physical gold, they're going to have a premium because the dealer that's selling it is going to want to make a little money. So typically it's a percentage, or sometimes it'll be a flat rate. So let's say that gold is at $2,000 an ounce. You want to purchase some. They might have a $50, $60, or $70 fee on top of that. So it will cost you, let's say, $2,070. Now, one thing to note when you're going to buy physical gold is they'll sell it in grams, they'll sell it in ounces, and you can also buy it in many, many forms. So be careful. You have, for example, gold coins. A coin has a lot of variables. If you want to try to purchase and invest in something like gold because you want to hedge against inflation or for whatever reason you just want to diversify, you want to try to get something, in my opinion, that is as close to spot as possible. When it comes to coins, there's many different variables. People may like the way that the coin looks or what year was it created, what type of pictures are on it, that sort of thing. If you're just looking for close to spot, let's talk about an ounce of gold. There are some popular 1 ounce bars. Two that come to mind are PAMP, P-A-M-P, and Credit Suisse. You'll see those quite often. And they'll say that they are 0.9999997, almost 100% pure gold. And that way, those are known not because of the way they look, because they have a pretty design, but because they're basically as close to just having a nugget of gold as you can get. And you purchase them in various forms, let's just say an ounce. So the upside to this is that you're going to purchase that gold, take it home and store it however you want. It's in your possession. You know for a fact that you have it. Of course, when you buy it, you're paying a little higher than spot. And when you sell it, you're going to get a little less than spot. So gold is typically something, if you're buying physical gold, that you're not going to be flipping on a daily, weekly, or monthly basis. Chances are you're buying it to hold it for an extended period of time because it has fairly high transaction costs. But there are no fees in order to manage your gold account, which I'll talk about in a second with other ways. And there are no fees to store or take or have custody of your gold because you have it. So that's the first way, is buying the physical gold. First thing to know is the spot price, and then of course the premium. Now the other two ways to buy gold, I'll talk about ETFs, electronically traded funds. There's popular ones such as the Spider one called GLD, and they hold physical gold. And I believe they try to hold almost 100% of what the amount of investment that they get, but it's not perfect because they actually take management fees. So the price of an ETF, they try to keep it as close to spot as possible. So the downside is they don't have, or they may not have, the exact amount of gold to match the amount of investment because they take management fees every year. So there might be a little bit of a differential. And the price of the ETF doesn't necessarily have to match the price of gold. It could be marked up, it could be marked down. So when it comes to an ETF, they have and own a trust, and the trust holds the gold. So your share represents a percentage of that trust, which holds gold. So you're not actually buying and selling physical gold, you're buying and selling shares of the ETF. Those have fees. I believe it's 0.4%, I think, is the fee for the GLD fund. And there's, of course, others, and they have different management fees. So when it comes to that, one of the pros is that you can quickly go online during the trading day and buy or sell this ETF. One of the downsides is the gold is not in your physical possession and the price may not track gold perfectly. That's the second way to buy and sell gold and have it in your portfolio. It's probably the most liquid way that you could buy and sell quickly. However, there's a new one, a new way that's come about, and that is what I would call a custody account. And I happen to use one called Vaulted. And what Vaulted does is through the web or an app, just like you would access your bank account, you put money into your account. They sell gold, they sell silver, buy and sell. When you purchase gold or silver, they actually purchase physical gold and silver and keep it in a vault. I believe the gold is in a bank in Canada, or at least a physical location in Canada. So when you purchase gold, they purchase an amount of gold to back it perfectly. You can request your gold at any time and they will actually send it to you. Now, there is a fee that they charge, a premium on top of the spot, and they show you what that is as soon as you go to purchase. They have a wholesale price, which is usually pretty close to spot price of gold. And then they have a premium on top of that. No different than if you were to go purchase physical gold at a local broker or a store down the street. They also have a management fee, much like an ETF. I believe it's 0.4% a year. I think they charge it twice a year. So there's a cost for them to have physical custody of that gold. But this particular program is a nice, in my opinion, sort of middle of the road between having that physical gold, buying it and storing it yourself versus an ETF fund. This way, you know that they back the gold that you've bought or the silver that you've bought. The spot price and the premium is no different than if you were to go buy physical gold. Sometimes it can be, in my opinion, better, is what I've found. And you can log in and see what you've got, but you do not have it in your physical possession. Some people don't like that. So those are the three ways to buy gold, buy silver, those commodities if you want to diversify. And there's another video where I explain how Vaulted works. And there are other services like this as well. I hope this has been helpful. Thanks for watching.